You have questions, we have answers. This is Jane Muller.
And this is Ken Muller. Welcome to our show, all about real estate with Ken and Jane. Well, Jane, last week, the first show of the new year, we kind of recapped the 2025 real estate market without the numbers. Now we've got the data to kind of back up our generalizations of the 2025 market. So we're going to do the numbers, which is great.
That's right. I mean, Ken, with the real estate, right, especially when the holidays fell during the holidays, so a lot of the transactions, if they close during that last week period, may not reflect onto the numbers. Yeah. So that's why always good to do the end of year summary the second week of the new year. So that's number pretty much have the real number. But giving today, I'm the one to
unwrap the present. I'm excited. Let's go.
Because Ken always loved the numbers, right? Yeah. When he in charge of numbers, there will be pages of numbers. But for me, to in charge of number for today.
You have like one piece of scrap paper. I can't even read your writing, so I don't know.
One line. Even a one page actually is one line. So I feel the most important number to get the trend is how many homes were sold during the year 2025. Also, I have the number 2024, 2023. 3 years number as a comparison. So I believe when you look at how many homes have been sold, that's definitely going to give you a real picture of the real estate market in the past.
And
once again, in the past.
I'm sorry to interrupt, but this is for Central Jersey MLS.
That's right. Now it's Old Jersey
Old
my
Jersey.
friend.
But my mistake. My mistake. We went from Middlesex to Old Jersey. Now we're right.
Now the Central Jersey and now it's
Old Jersey
Old
MLS.
Jersey. Old Jersey MLS, including.
But I mean, it covers the region, pretty much Central Jersey and
a little bit north. North. It's a much bigger area. So having said that, Ken, now the Old Jersey's number probably have a more significance because they cover bigger,
a broader range
of townships. So that's I know how anxious you are. So let me unveil the number. 2025. According to Old Jersey MLS, once again, that's for the homes, for the property, business, everything in the old MLS. If the agent didn't put it on, or if the agent home the MLS is different, they didn't put in this one, so won't cover. But that's very minimum number, very rare. But in this case, the total number is 8,748. So 8,748 homes sold in roughly Central Jersey
Which sounds like a lot, but we have to compare it to what's sold in the prior years.
Yeah,
so we
the prior year, 2024,
idea.
Sold is 8,614. So the difference is very insignificant. So for about 100 house, give and take, that's just normal. Okay. Because some years, it's just on the boundary. So maybe people close in a different year. Mm-hmm. So that's always happening. So that's really not a huge difference there.
And it tells you kind of tells you that the market is pretty stable. From 2024 to 2025. Now let's go back to 2023.
It's 8,714.
Okay.
So you can see the number is very consistent. Remember, Ken, on 2023, everybody crying, including me. There's no inventory, right?
But
so that was come back from 2022. 2020, 21, 22, they had a lot of transaction going on.
Because the interest rates were still low.
And a lot of people change lifestyle because of COVID and everything else. And the people want to buy, want to sell. But 2023, we encountered a big different market, which is the inventory is very low, and the interest went up too. But because inventory is low, so the home price keeps steady going up.
Right.
So that's
So pretty much the markets for 2023, 2024, 2025 are kind of pretty steady. And despite the interest rates kind of hovering between the mid to upper fives all the way up to 7, and now they're
back down to just over 6. They're hovering between.
Because there was a lot of pessimism when the interest rates crept up to the 6.5, 7, that would really hamper the real estate transaction market. But like we said, for many times, it's due to the lower inventory. There was still enough moves out of necessity, or it still had the sales figures to stabilize the market.
I always think, Ken, I agree with you 100%. But I think when 2023, when initially the interest went up, right, significantly, as a shock the market. Say, for example, right, like me, right, if somehow you just force me to do 50 setup, for you, maybe nothing. For me, 50 will kill me. Send me to Robert Johnson emergency room, right? Yeah. But after that, that initial shock, you make me do it every day for 50.
Yeah.
And I don't like it. I still hate it, but I'm getting used to it.
Why don't you like it after a while? You'll learn by repetition. You'll love it then eventually. You got to take your mind that you'll just get into that groove, right?
Ken, I mean.
So that's the same analogous, I guess, what you're trying to say with the interest rates. It's a shock when you go from the suppressed interest rates of 2.75 during COVID, and then you jumps all the way up to the 5 and then to the 7. Then it's all what you're acclimated to and you get used to. But now when you go from 7 back down to the 5s again, people are like, think that's a bargain.
It's a bargain, yeah. But that's nothing to do with my exercises because when people buy, they have a need for it. They want to be close to work, close to family, change lifestyle, school, and whatever the reason they decide to do. But my health, every year, the annual check show me I'm very healthy, so there's no motivation, to make a big change, right?
Right.
So that's about real estate. It's about motivation. For the buyer and the seller, motivation. A lot of sellers ask me, when's the good time to sell? When's the best time to sell? I mean, nobody knows. It's a crystal ball, right? 2023, the end of 2023, we thought, 2020, from August, June, going up, 2020, 21, 22, surely by 23, based on everybody's experience, the market will go down because it's a cycle, right? But no, they didn't.
They were saying that for the last 2 years.
Yeah,
that
and
the market
2024,
was
I thought they're going to hit a plateau. They're going to, I don't think birds, they're going to going down, right? Let's call it a natural correction, right? No, that was wrong. And then the 2025, I was very sure that was the end of the celebration, the rise, right? I was wrong. So even the people in the business do day in, day out contact people. You never know. Mm-hmm. You never know. But 2025, the price did go down after the summer. But now, 2026, I see the market come strong again.
And even judging from the sales that you had that went under contract or return your review the end of 2025, and now in the first full week of January, you're still seeing you're still experiencing the bidding.
The bidding war. I mean, one house is went over 100,000 easily.
So
luxury home.
And that's remarkable.
Remarkable. I said to seller, it's not. If I knew, I would ask for more, right? So I'm the agent, little different. I mean, some agent will give you a strategy. Let's create a bidding war. But with a bidding war, it's always risk they didn't bid up, right?
Right.
And also you don't set up a good, like some. I wouldn't say good example, but you come somehow wrecked up the market, right? For me, I understand some agent, you said have been successful, but for me, I always recommend the seller to lease the house what I believe the fair market is at that moment. So, but sometimes
the fair
I'm
market
wrong.
Value is changing.
Yeah, change.
Right,
yeah.
And the market adjusts itself.
Because when we look at the data, right, when you do the comparative analysis for the seller, right, I mean, you look at the back mirror, like when you're driving. You look at the past. So you don't know. I mean, for example, just like that example, right, at the end of the year, if I looked the past, if I anticipated market going to plateau or slow down, right? So obviously, what I ask, I think is a fair market value. Mm-hmm. But I was wrong. When we had an open house during the Christmas, the New Year weekend, we put on market 26. So the New Year weekend, we had like 25 odd families, so over 100,
which is amazing.
120
for a
people.
luxury home, if
1.25 is not cheap.
It's not cheap. It's
Yeah,
not cheap even.
and then the next week, because there was all holidays between. So after the New Year, so New Year was Thursday, so we did another open house on Sunday, and another 21, 22 family, another 100 odd people, and which is 5 of them was from the previous week. But still, we had total 9 offers.
So
And everybody's up there.
that means the money is there, the funding
Yes,
is
there.
there, and
Yes.
the people have.
And
the
we have a
money
cash
ready.
offer, we have a mortgage offer, but majority of the offer very strong. I would say 9 offers. Every offer is super strong offer. So I mean that's like me to believe.
That's encouraging signs.
Yeah,
for
very
the
encouraging signs.
You know,
Yeah,
for the
in the
real estate
economy and
market going
everything.
ahead for 2026, and I think that's very favorable for.
I think so. I think the also I feel for the half of 2025 we just passed. If the home need work, and then it's harder to sell. Because a lot of people worry about inflation, how much costs them to renovate, plus the time, plus effort, and it's harder to sell.
Right.
If it's a good house, well done, will get really good number of the home. So that's really some house beating, some house not. So why? Because there's something there for the buyer to be excited about.
Right.
Yeah, I think going forward, right, 2026, I don't really see, big changes. It's become more kind of a norm now, right? Whatever the market we see, the last 3 years, the inventory has been stable.
Yeah.
So I think 2026 probably stable.
I was going to say, do you think in 2026, the one thing, will the buyers have any more breathing room where they're going to maybe take advantage of some seller concession or some, not
I don't think so,
not having
Ken.
to waive the appraisal contingency?
I think it all depends, right? I mean, that's really last 6 months after June, the market did its own correction. So the market did went down a little. So, and especially some buyers did negotiate a better deal for themselves, don't have to give up anything. But since the end of the year and this week, I mean, the new year, I feel the good house still competitive. If it's more than one people want the house badly, you have to give up something in order the seller to award you with the house. But on the other hand, as a leasing agent, myself and the other sellers listening there, set right expectation is very important. Even though, right, I mean, we're not going down, but I don't anticipate a huge rise or the rise. I mean, last 3 years, we almost have the double digit, rise, like 10%, boom, boom, boom. It's like crazy, right? So, I mean, from the COVID from 2019 until now, it's almost 30 to 50% increase.
Which is,
it's like
crazy, right? So you have to,
unheard of.
You have to remind the seller that their expectations have to be realistic. And also the selling time. There was, I think in 2025, the expectation for a list agent was that if my house wasn't under contract in 2 to 3 weeks, something's wrong. What's going on? How come?
I mean, again, it is one way it is, Ken, because if the house doesn't sell for 2 to 3 weeks, that means the buyer didn't agree with
the
your
pricing
asking price.
or something with the house.
Yeah. When the buyer disagree with you, there's one of the 2 things I can suggest. Actually, 3 things. One is you can lower the price. Second, you can improve your home. Thirdly, just write it out because the market is up and down, right? But if the trend is truly going down, right? So wait it out. Third option would not be available. Right. But if the market is stable, like
we predicted,
in 12 months they have up and down the little correction. For example, say good example would be I put some house on the market in October, didn't sell. Okay, November didn't sell. But now, suddenly, because of short of inventory in the wintertime, now I have a contract.
Yeah.
So the seller didn't do any improvement. The seller didn't reduce the price.
But the market,
temporarily rise up. So sold. But that would gonna be up and down. So that's only apply for the sellers if the market not move greatly
And they
in
catch,
the opposite
they catch a
yield.
little bit of a wave on the
A wave,
market.
yeah.
Yeah.
But the thing is, some sellers said, I'm not in a rush, I can wait. That's not recommended because, for example, if by May last year, June, you didn't drop the price and you wait, it'll be 6 months until now.
Which some sellers can't afford.
Yeah, exactly.
Okay. We're going to go to break. We'll be right back after these messages. Okay, welcome back to our show. So for 2026, Jane, let's talk a little bit about the mortgage rates and how we see them going for 2026. If you see them going down any or staying steady.
Once again, I put this way, Ken, right? I don't anticipate the rate will go up. Okay, I think the Fed, I mean, from what we read, they're probably gonna, to lower the rate further, and but I don't know how much by Fed lower the rate going to translate into the mortgage rate.
Right, because we've said this before, but a lot of times, even if the Fed lowers the rate, the lenders have already anticipated that and adjusted that into their lending
rate
rates
already.
to the consumers. So
yeah,
it may
and
or may-
also depends on the debt because they are correlated with the bond, closely. So, I mean, but I don't, at least the good news is, at least I don't think the interest will go up. I think the interest will stay steady. I think they're going to go down slightly. Like you said, right? They were, I saw a few weeks ago, last year, they had even below, 6, like a 5, high 5. That's really good encouragement because when you say high 5, you automatically think it's 5.
Yeah, no, psychologically, that's like with pricing. We've done this with, like, if you have something priced below, like
a certain number,
$3.99, it's below 4.
It's a 3.
It's the same, they psychologically.
So psychologically, and also if they below 6, that's kind of before COVID, right? That time it was like a 5, 5.5. So that's around that. Go back to norm. This new norm, right?
Right.
And that would definitely gonna help. So also we talk about a few years now why we short of inventory. You and I talk about this since 2003.
Right.
Right.
And
3, 4, and 5. One of the main reason is because the people do not want to have no motivation, the seller, to give up the 2.5 going for 7.
7, right.
So that's huge,
Difference.
impact on their mortgage, right? So now if they go down mid 5, that would definitely give them, something to think about.
It's still a big jump.
I mean, hey, from 2.5 to 5, so it's not bad. From 2.5 to 7, that's huge, right? Yeah, so I think by doing so, maybe they'll free up some inventory.
Yeah.
But on the other hand, I'm just like both sides, right? One side, agent will pray for more inventory, right? The buyers pray for more inventory. But if you truly have a lot of inventory hit the market, and then there will be a buyer's party, right?
Yeah.
Supply and demand.
They haven't had
the
for
price
a couple years now, right?
Down.
It's been a while since, I guess, before COVID. I don't even know if we go back to 2019.
Yeah.
I can't remember if that was more of a neither a seller nor buyer's market. It was more a balanced market.
Yeah.
So that leads to the next question. Do we think that the mortgage rates are going to slow down the buyer activity in 2026?
I don't think so. I think, because last 3 years, right, last 3 years is pretty much steady. Once again, the buyer is driven by the interest rate. Yes, I agree.
Right.
But on the other hand, a lot of buying today's, right, is most likely driven by the need.
And also
no longer by the emotion during the COVID at the beginning.
Right. The serious buyers are out there. And also, as we said before, it comes down to the monthly payment.
Yes.
That's the more important, that's the overriding factor for the buyers. So if the monthly payment is manageable, then they're going to be out there.
Yeah, they're going to be out there.
And they can refinance whenever the rates
plus it's lower than the interest rate already went down. So psychologically, if they saw 7, now it's like high 5 or even 6, that's not going to turn the buyer
and
away.
Judging by the interest rates for 2025 and I think 2024 being higher than they typically are projected to go now, that didn't seem to slow down the market. So barring anything like an overall recession, I see the market, the real estate market as remaining very stable and strong for 2026.
I agree with you.
That's my analysis.
I agree with you, Ken, because
the overall economy looks fairly good.
Stable.
Stable.
Stable. So because as you said, right, when the interest rate suddenly went up, you set a panic signal. Everybody just shocked and wait and see what happened. After a few weeks, they came out, they got used to it. So, I mean, so I agree with you. I think the economy is stable. That's the main thing. So if the economy is stable, interest rates stay stable, little lower, that's going to help the real estate market. I truly don't think 2026 will have a much big changes from 2025.
And also important to note is that for Central Jersey, our market can't be compared to a national level because we happen to be in a very unique situation where we have New York, Philadelphia, we have a lot of job hubs. So that's a driving force. The employment demand is there, and that's going to keep the buyers that need to be here for the employment. That's going to keep the market stable and
the school too. I mean, New Jersey always well known for the schools, so, even though we have to pay maybe the highest or second or third highest in the country for the property tax, but let's keep the school strong. So that's why people move to New Jersey, especially from New York or Pennsylvania. They come especially from New York, right? I mean, they seeking for bigger space and much more affordable compared with they come from.
And the jobs.
And then the jobs is still close enough to travel.
And not everyone can work remote now. There's been a whole push the last
year. Even they go back to your work, right? Central Jersey is known for that. These people from New York move here.
They move here. So it does right.
From the 60s, 70s, 80s, 90s.
Yeah.
So the history keeping repeat itself.
Right.
So that's why I think for us, luckily, I don't think 2026 will have a dramatic change, but we have to set the right expectation, from the seller. So the market not gone to, the neighbor sold this, I want these plus 100,000 or 50 or 20 or 20 may not happen.
Not realistic.
And also within a year, you have an adjustment itself. Last year, 2025, there's a true story. 2025, I have two clients want to sell house. They both pretty much the same size, similar home. So I asked them to put on the market. One said, Jane, you don't know. My backyard is so beautiful. You'll never sing. I said, yes, I can see the tree. I know they're beautiful.
Right.
But nevertheless, they want to put on later in May. The other one took my advice.
Because they want to put it on May because they want to show off when everything is in bloom.
Yeah, and they figured, Yeah, that's also they used to. They figure they put on,
in the spring it'll show better, but the
people still can get to school,
right.
And because they want to close July, August, so before the school.
But
so
on the flip side, you advise them against that because of the inventory, right?
I said the inventory because in May you want to put it mid-May.
But so does everybody else.
Your yard look beautiful. Everybody's yard look beautiful. Think the same. So nevertheless, they didn't put on. So the other lady said, yeah, whatever you say. Put it on. We got overbidding on the other house. We sold over asking. This one put, mid-May, and then we couldn't get that number because
despite the pretty lawn and the curb appeal,
because think about it, Ken. Think about it. When you get the May, you already have the number what's selling in January, February, March, right? April. So some of the put on February, they already closed in May.
Right.
Or March in May. So you saw, oh my God, so encouraging, right? But when you put it on the market, that's the back. But in May, unfortunately, a lot of people thought the same. Suddenly, every week, 2-3 houses hit the market.
Yeah.
Boom, 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 boom. So that case, at the end, we had to, by mid-June, we said, my God, we're going to miss the market. The school going to finish very shortly. So we lowered the price, and then luckily, I managed to get a field to went up a little, but still didn't go up to the one they put on the market earlier.
So the bottom line is timing with inventory is very important. It can be more important than having the perfect presentable house. If your house is good and ready, even if it's not in bloom yet, it's better. Usually the rule is in the winter months, less inventory. If your house is ready and you're ready to move,
and the interest rate is lower too.
Get it on the market because there's less competition.
Absolutely, it's a lot of demand, but less competition. Yeah. Absolutely.
So there never is not a good time to put your house on the market.
It
winter months. It depends on.
A lot of time if someone have to sell in certain months, you have to sell.
Sell, yeah.
So as an agent, we'll do our best. But if you're ready, you just want to wait for the bloom. I don't think that's a good strategy. That's all.
Mm-hmm.
You know, I mean, nothing is, you know, maybe another year is different.
Nothing's set in stone.
Yeah, nothing set in stone. But last few years, we get the most money during the Christmas New Year because a lot of people have a time to see the house. And they're all in good mood, and they're all bidding.
Yeah,
so that's the last few
speaking of bidding,
years.
that was the projection for 2026 with the bidding wars. I mean, it's the beginning of the year where started, or you've personally experienced the bidding wars, and then the question is, will that trend continue? And I think
may not be,
I
because
think the
last year it's a
right?
bidding war in the beginning too.
Right.
And then about probably in May and June, they slow down. The reason is not a buyer slow down. It's suddenly more house hit the market.
Right.
So the buyer have more to choose from. Last year, once again, there's another
supply and demand, right?
Yeah, there's another true story, right? There was a house on the market, and I have my house on the market. So at the end, they had a multiple offer at that time, right? And they chose one, so the second round up came to us. So bought our house. We quickly done. So they went to in the home inspection, right? And what happened was, during that time, that was May, right? Mid-May. There's a lot of house on the market because that buyer took longer to finish the attorney review. That agent they chose, right? And then the home inspection took much longer to organize because there was Anyway, long story short, during that time, suddenly, I said to you, the mid-May, the house on the market every week, a few, boom, 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 in the same area. So that buyer feel, oh my God, I bought too high. The market changed. So they make a lot of unreasonable demand. Even the seller gave it in. They didn't want it. And then they canceled. You know, so, I mean, once again, when they put back on the market, they get much less because that time the market went down.
Right.
It's a timing.
Yeah.
It's all timing.
It's all timing, and then it's perception, just like with stocks. The same thing with public buyers' perception. If they start second guessing, if they see multiple homes, they compare the pricing and they say, "Look at this home went on the market. How come it's 10,000 less or 15,000 less than we're
even
for?"
They didn't ask for less, but you suddenly see 3-4 house, similar price range, similar area.
Maybe I should look further, investigate,
maybe
and do a little
that
more.
one's better.
You always think the grass could be greener on the other side, right?
Even though it's not true.
Yeah, exactly.
Yeah.
All right, we're almost out of time. So last message, what do sellers need to understand about the 2026 market? Anything different than the 2025 market from what you see, or just basically it's going to be, my notes would tend to say that it's going to be continued stability, some moderate maybe price growth, but more or less a stable market.
I mean, I agree with you 100% again, Ken, but if I have to sum up in one sentence, I would say, set up the realistic expectation. So that's all about the expectation. If you set up too high, I mean, you will learn. If your house 3 weeks, 4 weeks, no offer, the market doesn't agree with you. But if you set the number is realistic, if just happened like what just happened to this family, right? And 9 family fighting for it, there's only ways going up. So you will see a lot of people still give up the appraisal, give up home inspection. You will still get what you want. So, but expectation is the key for the seller.
Very good. That'll do it. We're out of time. Hope everybody enjoyed the show. We'll see you next week. Have a good one.
Thank you.